Assalamualaikum and salam sejahtera to everybody. We are from UiTM campus Kota Kinabalu Sabah, class ACC 111-1A1. Would like to present our accounting simulation project prepared by our group members. This is our group members which directly involved in completing this project for the past months. Consists of 4 people: Vulandina, me, David Petrus, and Darren Claudius. We would like to proudly present our project today.
This is our business overview. We established a partnership company named Alpha Bookstore on 1 January 2020. Maizara Ibrahim, Vulandina Yap, David Petrus, and Darren Claudius are the founders of the Alpha Bookstore. Our business total capital is 185,000 ringgit, where the contributions is based on the capital ratio, which is 2:3:1:4. We also hire 3 employees, where each is paid a salary of 1,300 ringgit. We sell almost every kind of book to students from various stages. Next, this is our business profile. And this is the vision, mission, and goals for our company. These are the reason why we set up Alpha Bookstore in Penampang. The first reason is requests made by most of the parents in Penampang district. Second is less competitive. Third is strategic area. We also use several accounting concepts in preparing our financial statements, such as going concern concept, neutrality concept, business entity concept, consistency concept, and more.
These are the transactions that occur during the first months of Alpha Bookstore operationing.
All right, what you see right now is the next step in financial reporting, which is doing the accounting equation for the transactions. As you can see at the bottom of the equation table, we managed to achieve a balanced total amount. We have analyzed each of the transaction effectively with its specific date using the double entry system. And yeah, because of it, we got it balanced. Now, moving on to the journals. There are 3 steps we used when we record each of the related transactions. The first step is we identify the transaction and its each account involved, such as the 1st January transaction. We all can see there are cash, bank, van vehicle, and capital accounts. Then we determine which account is increased and decreased by using the rules of debit and credit. The assets increase and the capital is decreased. Then we put the transaction in the journal with a brief explanation. Like the 1st January, we simply put balance CD. Now, about the ledgers. Well, we post the information from journals to ledgers. It shows each specific account involved. In general ledgers, most of the accounts we put are assets like cash and bank account, liabilities, honest equity like capital account, revenues such as discount received account, expenses like advertising and salaries accounts. In purchases ledger, we put our creditor account, and sales ledger, we put our debtors accounts. As you're aware, in every account, there are some total amounts shown as negative. This means that it belongs to the credit side in the trial balance. And how about positive amount? Well, it is vice versa.
This is the trial balance for Alpha Bookstore. This trial balance shows that the debit and the credit side of this trial balance have the same amount, which is 217,480, which means that this trial balance was balanced. This is a statement of profit or loss for the year ended 31st of January 2020. According to the format, we must minus the sales with the sales return and discount allowed to get the amount of 27,010. Then we need to minus the amount with the cost of sales, which is 19,470, to generate the gross profit, which is 7,540. After that, we need to calculate the expenditure, which is amounting to 5,220. Then we minus it with the gross profit that we got earlier, and then we will get the net profit, which is 2,320. Move on to the statement of financial position for our store. According to the format, we must add the non-current asset and the current asset to get the balancing amount, which is we got 187,320, and then we calculate the owner's equity, which is we got 187,320, which is the same amount as the balancing amount, which means that our financial position was balanced.
Based on the SOPL, we have definitely achieved gross and net profit. Of course, we are happy and glad because it is our first month of operation and showed a good result. How? The answer is because we use some effective strategies, like we effectively pricing our goods for sale, we hired employees to provide valuable insight to customers, we tried to settle any debts within the given period of time, and we also try to give discounts on purchases made by consumers. Next is based on SOFP. We use the data to determine the level of risk involved in lending to the business. As a whole conclusion, we will strive to improve our business by using the accounting concepts and strategies.